Welcome to this explainer. Listen, if you've been watching the markets lately, you're probably feeling some serious whiplash. Today, we're going to untangle a massive web of global events. We're talking geopolitical tensions in the Middle East, power plays in Washington, financial shockwaves hitting out of Tokyo, and yeah, even extreme climate realities right here at home in India. The ultimate goal? Figuring out exactly what you should do with your money right now.
Okay, let's quickly run through how we're breaking down this perfect storm today. We'll start it with the Hormuz choke point, look at Trump's toll threat, unpack the Fed and Japan shock, and dive into El Niño's economic threat. Then we'll cover the FCNR silver lining, and finally, why you absolutely need to keep your SIPs running.
Starting off with Section 1, the Hormuz choke point and the escalating situation in the Middle East.
So just when it looked like things were calming down, a recently signed memorandum of understanding for a ceasefire completely fell apart. Let's trace exactly how this happened. First, the MOU was signed, right? But reports showed Israel was pretty unhappy because it totally ignored Hezbollah's presence. Then, a Hezbollah attack tragically killed 4 Israeli soldiers. Israel didn't sit quietly. They retaliated with an attack on Lebanon that left 47 people dead. Iran immediately called this a strict violation of the ceasefire. And their response? Well, Iran's Islamic Revolutionary Guard Corps, the IRGC, took a massive step. They retaliated by closing off the vital Strait of Hormuz.
This is absolutely crucial. The IRGC has explicitly stated they won't let any vessels pass through. With this major choke point completely blocked off, crude oil prices are facing huge upward pressure. And look, you know how this goes. Whenever oil prices spike like this out of nowhere, it basically acts like a massive tax on the whole global economy. Historically, that is terrible news for stock markets everywhere.
Moving into Section 2, Trump's toll threat, in the politics and power plays happening in the U.S.
As if the physical conflict wasn't enough, U.S. politics are adding massive uncertainty to the mix. Donald Trump recently posted on Truth Social about the 60-day ceasefire, and this perfectly captures the power play right now. He basically said there will be no tolls in the Strait of Hormuz unless the United States imposes them. He's arguing that if the peace deal fails, the U.S. is going to demand total reimbursement for acting as an angel and providing services to the region.
This reveals a really strategic calculation. Think about it. If the deal fails, the U.S. is sitting in a great spot to just sell its own oil to the rest of the world, keeping them mostly insulated from the immediate regional chaos. But Iran, they're definitely not sitting on their hands. While diplomacy stalls, they are potentially using this window to negotiate the release of their frozen funds over in Switzerland. If that cash gets unlocked, Iran gets the financial backing to potentially buy advanced Russian weapons. That literally lays the groundwork for even bigger escalations down the road. Bottom line, this conflict is far from over.
All right, Section 3, the Fed and Japan shock, where central banks are quietly squeezing global liquidity.
Let's pivot from geopolitical battlefields to financial ones. In the U.S., there's been a massive leadership shakeup. The newly appointed Fed Chair Kevin Warsh, who stepped in for Jerome Powell with Trump's backing, is taking his super hardline stance. He's made it crystal clear, no easy rate cuts, and no advance warning signals for the market. He is dead set on hitting that 2% inflation target. What does that mean for us? Borrowing stays expensive. And with the U.S. stock market chilling at an all-time high, this strict policy really cranks up the risk of a painful market correction, because that higher cost of capital is going to squeeze corporate profits hard.
But to really grasp the next massive threat to global liquidity, we have to talk about the yen carry trade. Okay, here's how it worked. For decades, investors basically borrowed free money from Japanese banks at near-zero interest rates. They took that practically free cash and pumped it into higher-yielding international assets. We're talking everything from global stocks to highly volatile crypto.
Well, the party is over. For the first time since 1995, let that sink in, 1995, the Bank of Japan has officially raised interest rates. This effectively kills that easy yen carry trade. Suddenly, those global investors actually have to pay real interest on all those borrowed yen. To cover their positions, they're forced to sell off their international assets en masse. And that action aggressively drains liquidity right out of global stock and crypto markets.
Which brings us to Section 4, El Niño's economic threat and the direct climate impact on India.
So we've got wars threatening oil and rate hikes draining capital. But right here at home, we've got an internal threat. Look at this number. 97. Just take a second to process that. 97 Indian cities currently rank among the top 100 hottest cities globally right now. The heat is absolute, and it is literally everywhere.
This is way more than just a really uncomfortable summer.
This severe El Niño is actually drawing direct comparisons to the devastating heat wave of 1877. Sure, we have way better tech today, but the economic threat, it's still massive. Extreme heat plus predictions of a low monsoon directly threaten our crop yields. And remember, agriculture makes up roughly 18% of India's GDP. So a failing monsoon doesn't just mean we sweat more. It means a drop in agricultural output, which triggers a massive spike in food inflation that hits every single consumer and severely squeezes the broader economy.
Okay, deep breath. Here comes some good news in Section 5, the FCNR silver lining, our local defense against these global shocks.
If you're feeling overwhelmed by all these overlapping storms, I totally get it. But there is a very powerful domestic financial shield being deployed right now. First, though, let's look at the damage. Foreign institutional investors, or FIIs, have been relentlessly yanking their money out of the Indian market. Just look at this data. They dumped 6,000 crores in February, an unbelievable 1 lakh crores in March, 54,000 crores in April, 32,000 in May, and already over 5,300 crores in June.
It looks bad, right? But here is the brilliant counterbalance from the Reserve Bank of India. To fight off this relentless FII selling and all that global macro tension we just talked about, the RBI is stepping in. They're now allowing foreign currency non-resident, or FCNR, fixed deposits in any currency until September 30th. This strategic move is huge. It's expected to inject a staggering $40 to $60 billion straight into the Indian banking sector and stock market. That flood of capital basically acts as a massive shock absorber, potentially driving our market upward even while the rest of the world is wrapped in negativity.
Finally, Section 6. Keep your SIPs running. And let's talk about your exact investment strategy.
So, the million-dollar question. With all these global storms colliding from Hormuz to Tokyo to El Niño, what on earth should you do with your portfolio right now? Here's your game plan. Step 1. Build up a really solid emergency fund. You need that buffer against potential El Niño-driven inflation. Step 2, and I can't emphasize this enough, do not stop your SIPs. Look, with the market hovering around 24,000, we might see a painful dip of, say, 1,000 to 3,000 points. It happens. But step 3 is to accumulate on those exact dips. Why? Because of step 4. The reality is, if you panic and stop investing now, you are going to completely miss out when the market inevitably resumes its long-term upward trajectory past 30,000. Don't let fear shake you out.
And hey, if you haven't actually started your investment journey yet, there's no better time to prepare. You can use the link in our description to open a completely free DMAT account. Plus, right now they're running a limited time offer where you can earn 1,500 rupees per referral instead of the usual 500. It's a genuinely great way to start building up some extra capital while you set up those crucial SIPs.
Before we officially wrap up, I want to test your market knowledge. We all know India's top index is the Nifty, right? But tell us, what is Japan's top stock index called? Drop your answers down in the comments. Also, if you want us to do a dedicated explainer diving into crypto taxation, just type the word tax down below. Look, we are navigating a literal perfect storm right now, but with the right structure and a cool head, you can totally weather it. Keep learning, keep investing, and I'll see you in the next explainer.